Well, this week we learned the collapse of Silicon Valley Bank was bought by another bank, a relief for customers, but the collapse caused some turbulence in the economy. For more, a local financial advisor, Bruce Allen, joins us now. Bruce, good morning. So the last time we talked to you about this whole thing, we talked about the markets being volatile. Where has that left us?
Well, right now what we see is that, and we've got a graphic about this, the S&P 500 started out at a little bit under 4,000 right before, the day before all this happened. So Wednesday, March 8th, the S&P 500 was just under 4,000, and yesterday we closed right above 4,000. So the resulting of all of this financial drama is that the market's even.
Yeah, okay, so...
A little bit better than even.
Yeah, okay, perfect there. How has the banking crisis had an impact on, let's say, interest rates?
Interest rates have been a different story. That has been there's been a dramatic flight to safety. And one of the places where we've seen that is that people have been buying treasury bonds, and the interest rate on treasury bonds has declined dramatically. And we saw that interest rates right before the Silicon Valley banking crisis on the 2-year treasury bond, just to give you an indication of this, Jordan, was a little over 5%. This morning, that same 2-year treasury bond was a little over 4%. So we've seen a significant decrease in interest rates.
Okay, awesome. Well, not necessarily awesome. I'm good for information right there. You get what I'm saying there.
Yes.
But what does this mean, for the rest of the year, of course, as we're taking a look at the numbers right now?
I think the biggest thing is that, as we saw in the last couple of days, there's a lot of talk in Washington about regulating these mid-sized banks that are lower than the biggest banks, differently and perhaps more stringently. And the banks are preparing for that by shoring up their balance sheet, and they may be lending less money out in the economy. If they're lending less money in the economy, that's accomplishing what the Federal Reserve might have done by raising interest rates maybe potentially 2 times more. And so we're looking at the impacts of that, and it may have a slowing effect on the economy. So there's more and more evidence to suggest that the recession that we have has been precipitated or increased by this event.
Now, you're talking about regulating these mid-sized banks differently. Are we looking at what we had prior to 2018?
That's a great question, and I had not been in those conversations, but it looks like there's a lot of talk about, hey, maybe we should have not taken that regulation away, or how do we effectively regulate these mid-sized banks without limiting their ability to be profitable businesses? And that's been the discussion amongst the regulators and the politicians. All
right, Bruce, leave us with one nugget of knowledge that if we take anything away from this, what is it that we need to know?
Well, I think that there's 2 things that are really good news. One is that the banking crisis has emerged, and yes, this was upsetting, but we've seen that there's a lot more strength in the banking crisis than we saw so far. We need to be watchful for, are there going to be another cases like this? But so far, we've seen the banking industry get through this crisis with a lot of help from the regulators and from the authorities. So we think that we think it's pretty much done at this point unless another shoe drops, and we'll be watching for that.
I'm about to say, which is a big relief to a lot of people who've been watching this play out very closely. Bruce, thank you as always. We appreciate it.
Good to see you.